Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome, Auvorians. Steve Vetterl today speaking through a microphone. Today's the 19th of January. Let me open up the Q&A window, if I may. All questions, if you guys could please put it in the Q&A window. That'll help. Chat window, let me know also if the sound is coming through okay. I don't know if you guys got a chance to see our new disclaimer video, which is just me talking at 1.5 times speed. It's kind of fun. Let me take a look. So how's the sound coming across? Pretty good? All right, cool. I'm getting a little bit of a feedback. Let me just adjust one thing here. Kind of odd. Okay, there we go. Can you guys see the Forex screen now? Forexfactory.com. So let's chat about that. We have, as you guys may have seen inside my Market Watch channel, a couple of different things, but fair amount of international news over the last couple of days. So as Israel's attacking the Iranian forces in Syria, the Italian government is a mess. Estonia's prime minister resigned, Holland's prime minister resigned. It's just been bananas. But thankfully, it really hasn't. Actually, hang on a second. Let me just reshare the screen. How's that? How's my sound? Is that better? Okay. Screen, not so much. Interesting. Tell you what, let's try. Let me just stop sharing here for a bit. Let me see if I can reshare. You know what? Let me unclick this share sound and optimize for video. Let's try this. How about now? Looks like there's new buttons that Zoom put on the bottom where you can actually do it for video sharing, which is the previous electronic video. Doesn't and should not be on. Look, there's something we all learned this morning. In any case, if you're just joining us, my name is Steve Vetterl. Today's the 19th of January. We have a lot of crazy news going on. And surprisingly enough, hasn't affected the currency markets. Isn't that nice to wake up to non-bananasness in currencies, right? So take a look at the DXY. For those in the equity markets, we are lifting to all-time highs in domestic markets here in the US. Let's take a look at the DXY to start. Now, note that, let me just drag this around. Our resistance line's been pretty good and pretty solid in terms of pushing back, as I talked a lot about on Saturday. So no surprise, though, for those who were tuning in, we expected to bounce off and drop down. How far, how fast, it only remains to be seen by the Lord Almighty. So let's take a look at the Euro USD, again, bouncing off the same areas, the completely correlated inverse of the DXY, right? Keep in mind, this is the daily chart, tradingview.com. And a lot of things have sort of lined up here. I know you guys have heard me talk about Confluence a lot in the past. This is an example of at least a couple of things lining up in Confluence, a support line, which is the red line here, as well as the green moving average, one of three that we follow. So this I wanted to point out that I didn't point out on Saturday for the Euro USD is we had a almost a touch of the two areas, but then we continue to bounce. So didn't really have a cross of any large degree, and we really haven't for some time, as you guys could see. Started to talk a little bit more about the last time we had a cross, essentially was right here, and that took the markets up with it. So want to pay attention to when these moving average lines are crossing in any form, you know, red's crossing over green, yellow's crossing over green, any of the different groupings, it's of note, and I'll make sure to point it out on that. Let's take a look at GBP USD, same thing, holding well. Just been looking at daily charts recently, and I haven't been diving into smaller time frames because honestly, it's not as important unless you're trading arrow. But you know, you're essentially looking for one of 10 strategies with arrow. And by the way, guys, just so you know, the arrow group has really been gaining some steam. So hats off to Nathan and the team for really putting together. You know, it does take some time. You have to sit around and watch for trades, and you know, a lot of people are home. So I certainly think it should be part of your licensing package with Auvoria. Okay, so let's take a quick look. GBP JPY almost looks similar to GBP USD, as you can see these two. Kind of surprising how much they look similar, right? Different pricing, but the charts look pretty similar. Do keep in mind for the Forex factory calendar here, fairly fraught, as it seems like I always talk about. Markets are fairly fraught with risk. I personally have had at least 3 or 4 times in 2020 that I have been out and completely removed, probably a good 1/3 of the year from the Forex markets. And I think that, yes, I certainly could have made money during those periods of time. But as far as the trades that were being placed in the various accounts, I did not want to have any low win rates in any of the trades, right? I didn't want to have any big drawdowns. So I decided to stay out. Last year was a rotten year for a lot of people. Unless you had your entire net worth in Tesla, you probably didn't have that great of a year. So going forward, it's good to see that you know, everything's just sort of like calmed down, right? Get some vaccines dispersed globally, albeit I don't want the damn thing. It's good to see that, you know, we're beginning to get some semblance of normalcy brought into the everyday life. So, you know, that's something to be positive. That should cool out currency markets, but we still have a lot of unemployment globally that's not being reported. That honestly, central banks, which is the reason I talk about this, need to be mindful. So if you look on my Twitter, and Satish, I got your question, don't post that to the chat. Just post it to the Q&A window as you did. So thank you. I will address that. But in any case, it's going to be tough, you know, and you know, this even argues even more. And no, I have no financial stake in Arrow, but this certainly argues when there's crazy periods of time to take a look into a more manual type of trading software, you know, have it as part of the diversification. So clear on that. Let's take a look at the Euro JPY. It's been acting pretty good. As some of you may not have heard me speak, I always think it's best to start analysis if you have a tradingview.com or whatever your software is, to start with the DXY, and then look to see what the majors are doing, right? What are all the USD majors doing first, right? Now, many of these have themselves as the first piece of currency in the conversion to the USD. And then I always go to the other ones, right? Where the USD is the first part of the conversion, right? USD JPY. And it'll give you a really good feel for what's going on in a lot of the other types of currency pairs, a lot of the exotics, a lot of the crosses, some of the non-major types of pairs. So a USD JPY, it's been acting perfectly inside this broader, as you guys can see from a longer term perspective here, broader downtrend. You know, no surprise, the US is taking on lots of debt. It's a devaluing event to our underlying currency, hence it's going down. USD CAD, same thing, bouncing in a really tight range right here. You have to go way back, USD CAD, to see where the support is. I mean, hell, got to drop to a weekly chart in this case, right? So if the dollar starts dropping even further, which we do expect at some point, probably got some balancing to do from some crazy moves we've made over last year. Could take a while, but it seems to me like this 23 area, and we'd probably be headed more towards. AUD CAD, same thing. Let's look at the daily chart first. Take a look at the weekly as well. So we're up against probably a big area of resistance here. Notice we've had a couple of doji candles forming towards the top of this. Could mean maybe a little bit of movement back down. USD Swissy. This we have to move back to a weekly chart, and then obviously going back to the monthly to get the big broad. So we're essentially there on the monthly chart for some of the lowest lows we've seen in 8 years, right? Again, no big deal, right? Because the US dollar's been weak. So it would make sense that we're down visiting some of these lows, but this is a big, big support area on the long-term chart. So do keep this in mind. We could spend some pretty decent time here, maybe a whole bunch of doji candles on the monthly time frame, which would more than likely signal to drop further below this. All right. GBP NZD, if you guys want to take a look. Gold. So just go back to the daily there on gold. This gives you a feel for where we are. Holding the pattern so far. There's Euro Aussie for those that even get into trading this daily chart. Probably a little bit of a snapback, so forth. That's pretty much all I want to say in currency land. Let's get to some of these questions. First question is, I've used GBP NZD Einstein, which is a big no-no in my opinion, Mr. Kumar, for a whole host of reasons that I have talked about ad nauseum on previous calls. It opened sell positions up to 8 levels in the sequence, but since last week has been a drawdown and it has been increased to more than 600. I tried to analyze the graph, as already spoken, broke the 3 resistance levels and looked at trend changes. Can you please advise, based on technical analysis, fundamental analysis, that there's any chance for come down too? So let's take a look. GBP NZD. Now, in all fairness, one of the problems I have, and we're looking at the daily chart here, when the essentially the pound's been strengthening, right? So let's start off here. Okay. So we know the pound's obviously near a, from just a weekly chart perspective, it's near some of the highest highs it's seen in about 2 years, probably headed up towards the 40 level, I would expect, provided continued weakness is the case with USD, right? So we know that this should not, based on the daily chart, GBP NZD here, this should not have been a surprise that we're going to lift back up and probably break out of this area and move a little bit higher. Now, I still think a lot of this is all dependent on what the dollar's doing, right? First, remember, it's the first pin of that set of pins that I talked about a couple times, a few Saturdays in a row. But I would expect this to probably hold pretty decent resistance level at this point, maybe spend some time balancing. If the trade sequences that you experience, and I don't know what you experienced, but I see the 8911 area. More than likely, if we're going to hold this area at the 9164-ish area, we're probably going to drop back down in balance, which, if I'm in the understanding your question correctly, would give you an opportunity with some of these, what looks to be shorts. This thing's taken in this lift, in this a sequence of shorts that's happened in this lift, the chance to maybe pull some of them off if we drop back down. Okay. But once we bounce off of what arguably is a pretty darn big area in GBP, because if you look all the way back to the weekly chart, you could see some pretty solid support here long term, all the way down from 85-ish to about the 86, 66 area, all in here. If that holds, I just personally wouldn't want to be in a software that's taking shorts as I'm lifting off of a very big support level, right? I mean, it's just general logic that more than likely we're going to visit a much higher level. And this is the reason that I'm just not a fan of some of these martingale strategies out there. They do fantastic, but why on earth would any programming, in my opinion, be put into software that is bouncing off a huge support level and it's probably going higher, right? Like nobody in manual trading land. I mean, just look at the general strategies in Arrow, right? I mean, nobody that is a super high quality trader in any type of trading environment, equities, bonds, currencies, they're just not going to start taking shorts off of a big bottoming area, or just completely flip everything I just said on its head, right? As far as coming off of some huge resistance that pushes us back down, right? On the higher time frame charts, it's just you don't have good win rates with that type of software. So what can we learn from this? The diversification, right? Look, I get it, it costs more money with more license and stuff, but all you do is bring a few people in and you get a bunch of those licenses for free if you bring the right amount of folks in. But also in addition to that, maybe sort of forcing, to use some more manual trading if you have the time. Maybe flip the license to Arrow if you can get out of that sequence without a lot of drawdown, maybe add it as an additional license, So Twitter, let me show you guys. As many of you know, my opinion of social media has gone way downhill. I do not participate in Facebook anymore, guys. So just know if you're going to try and hit me up on Facebook, I don't do it anymore. We are out. So this is my Twitter. It's at FX ES Trader. I'll put the handle in there for those. I try really to just put stuff on Twitter that helps out. I don't really engage in a lot of crazy banter or anything like that in Twitter. The people I follow are all very good at what they do. Many of them are very much super experts. I also follow a whole bunch of billionaires that are very generous on Twitter of handing out strategy, life lessons, all that related stuff. So, but I thought this was actually kind of crazy. I follow this guy, Cat Turd. He's actually absolutely hilarious. Very smart guy. Are we going to switch to Chinese currency next week? I thought that was great. But in any case, this is, you can follow me there. All right. What else do I want to say about this? Lots of risk coming up this week. Certainly does argue for either making your money early and turning your systems off before today, as I mentioned Saturday, or just not trading this week unless you are taking manual trades. All right. Let's answer some more questions. I have stopped live trading on this pair to avoid any further loss. Please, please advise that the best options to take in this situation. So, if you're in drawdown, you've stopped live trading, and are you just managing the trades that are on? So let me know the answer to that, because then you have a shot of getting out of drawdown. I don't know the answer to that. So when will the recording from last night's session on Alexander and Einstein be shared? Do know that Alexander and Einstein, if you guys have been following my call, O'Neill, who's one of our really good international leaders, he is hosting that because he is the Einstein Alexander expert. He's probably going to be offering a lot of really good insight. I would highly recommend you join his channel if you haven't seen that Telegram channel, I'm going to post it for you right now. See if I can pull this off without messing it up. So tell me if that guy works for our new AP Live, Alexander Einstein. Yeah, so if you guys open up the chat window, you can see I just posted it there. The answer to the question, and I get this a lot in different forms, and that's fine. You guys should really try and ask questions. There is no stupid questions, in my opinion. There's only the ones that don't get asked. So just make sure you ask questions. The problem with my answering the question with some sort of sophisticated, and by the way, I have, if you scroll a little bit further back on my Telegram channel, I have all of the real down and dirty, the meat, if you will, of turning off additional trades, in live accounts and letting the existing sequence play out. So there's a lot of pretty deep advice, but I've always been very hesitant to give anything further than that because, and here's the problem, because usually the questions I get, the way they're worded from our subscribers, I can almost tell inside their description that they're really nervous about it. And more than likely, it's money that they cannot afford to lose. So, and very few are willing to admit that. So I always tell everybody, just have a look, there's losses that take place. And if you guys want to feel a little bit better about losses, you can just Google some of the ridiculous amount of losses that some of the world's billionaires have taken. And many of them took those losses way before they were billionaires, and they just came back to fight another day. So the fortitude to be able to stick through that and the mental capacity to be able to handle that is a very important component to being a trader in any case. And the vast majority of the statistics globally, which are true, of whether they're option traders or bond or forex traders or any type of market-based trading, 95 to 97% of them lose money and never come back. That's absolutely true. Why? Because 97% of them weren't willing to do the work and didn't have the mental capacity to come back from a loss, right? Whereas you meet somebody that grew up poor. I got a friend that's absolutely in this case. His dad was a raging alcoholic. He used to beat him. He had every reason to just, fall to the bottom of a bottle, right? The kid made his way through Penn State and just became a superstar trader on the street, and now makes, a consistent 7 figures a year, but had to battle through some serious losses, including blowing up his first $100,000 that he had made. So he came back to do and fight another day, and I admire that. A lot of people wouldn't have that type of temperament to be able to come back from that. And that is an absolute key component that needs to be taught to everybody's psyche of dealing with loss. Now, here's another thing. Just like a 401k, right? If you were in the equity markets in 2008 and your 401k was heavy in stock funds or whatever the plan offered, you got clobbered, right? But you were still, in some cases, working and not retired yet. You still continued to contribute money to that and buy in at lower prices, right? It's no different in a Forex account. As long as you're not trading with money that you can't afford to lose, which is really the key thing here, just keep putting more money in the account if you can afford it, and gain the experience. This is the beauty of Nathan's error room, right? Even though you may want to trade other software, like a variable or have, a gearbox working for you, or all of them, this room sort of forces you to get the education, outside of listening to my calls and going through, in my opinion, Daisy Duncan's, all the stuff in the AP, live back office, and there's tons of training up there. Many of it's very, very easy to understand, as I know for a fact, because I have started to bring my 12-year-old son, Evan, who's really turning out to be the math genius in the family. I've started to introduce him to trading as of last week. So he's already gone through all of the Forex courses, and he's 12 years old. So, and he loved it. He thought it was easy. So I kudos to Daisy and the team there. for putting that together. Even though I sound like a broken record in this area, right? All right, so I'll get off my soapbox there. So Nathan has an Arrow Room. If you subscribe to that Telegram channel, Gabriel, I don't know if you have Telegram, but I would highly suggest you download and subscribe. They have a trading room, and they're live each week. Some days they trade, some days they don't. What's keeping the AUD strong? Let's go back to that chart. I'm assuming you're talking the AUD's been strong here from the standpoint, obviously, of the euro. It's been strong, obviously, from the standpoint of CAD. The answer to that, I would assume, is they haven't taken on as much debt as the rest of all these other countries are. If you want just a general macro answer, they've run a pretty solid ship down there in Aussie land. So my hat's off to. Next question. I'm just waiting to get on close these trades. So yeah, so Mr. Kumar, have the patience, if you could please, to wait for it to get back down there as I showed you the charts on that. I just going forward, if you can pull out of this, I would find other currencies to trade. This one's tougher for me to chart. It is more of the Wild West, in my opinion. I know for a fact that GBP NZD has blown out a lot of accounts in Einstein and Alexander. And it has nothing to do with the quality of the software. It just has to do with, in many cases, the nuttiness of this currency and or inaccurate settings being put in front of the subscriber. That's what O'Neill's in place to help you guys out with going forward. All right, so you got the Telegram, good to hear. So red folders, just so you guys know, forexfactory.com is one of the best in the planet. These guys are very accurate. I always uncheck these boxes. You just click remove filters. Red folder events just relate to impact, red meaning a serious or a potential for a serious impact. I just filter out, always make sure you're looking at the right week, obviously, and then I focus on red folder events only. These are things like central bankers speaking, releases of important numbers, non-farm payrolls, which is always a big one. GDP release, any type of press conference from somebody important from the Monetary Fund or IMF, so forth. Will all be noted on this. Typically with these types of events, I personally don't really trade around these types of events. These aren't as much an issue if you're trading American equities, right? Any of the US exchanges, not as concerned about this, other than something like, Biden speaking. You probably wouldn't want to be trading in front of that. I don't know what his first speech is going to be, but the concern of investors in this country have been mostly from the standpoint of just putting in policies that are anti-capitalistic, right? We don't want that. We want to keep a free and open and unmessed with capital market system. And then a very heavy component of that is taxation. So we don't want any taxation. Currently in the US, long-term capital gains are taxed anywhere between 15 to 20%, which is great, right? It encourages investment in anything. Short-term is higher. It's all based on regular income levels. And then you obviously have the futures markets, which are taxed at a 60-40 split if you're a US resident, which is pretty slick. So you can trade futures, and Forex and is traded in a 60-40 split. Gotta love it, right? 60% long-term gains. We do not want any changes as American residents to that tax structure in terms of it going higher, even from that level as a retail investor or from the corporate level, which was lowered as well by the previous administration. So those things, regardless of where one sits, left or right, it's not important to me. What is important is what everybody understands of how monetary policy works on this planet in terms of everything from, policy that's made and or central banks participation in any type of quantitative whatever, right? In this case, it's easing, all the way down to GDP and how it affects M1 through to M3 money supply. So if you do want any sort of precursor, or I should say, if you want any sort of education on that, you can go to my Telegram channel. I have a Forex cheat sheet that I've been talking about till I'm blue in the face here. It's actually a really good piece that I pulled out of a textbook almost 20 years ago when I was in finance school. So let's take a look. Any other questions? Because I am done, unless you guys have anything you need. Let me just zip through here. So check out the man Nathan and his Arrow channel. Now I know we're going to be getting on board a little bit more with Stratamus and Neo the Legend as far as additional softwares. As you guys may know, we've made some management changes to the corporate ownership of Auvoria, so we're trying to get through that. It's all been very positive. We're really looking forward to Chris Simonian running the show as president. He is a superstar in this field. And some of this guy's accomplishments with his previous company, Beachbody, taking him almost to $1 billion, should have everybody on this call that's a builder really pumped about his ability to execute along with the rest of our management team. So hats off to these guys, because they've been working like 80 hours a week trying to get all this stuff straightened out. And we are so much looking forward to less work down the road and more relaxation, right? But sort of getting the fruits of the labor paid off. And the same thing can apply to all of you guys as subscribers as well. The fruits of your labor is directly correlated to your willingness to put forth the effort. So please get yourself educated and communicate the same thing to your team if they're not on these calls. And with that being said, yeah, can we buy Auvoria shares? So the new VPS, let me just share this in case anybody's got any questions on that. See if I can go through this for you guys. So this is the VPS switchover, and you guys know on my channel here, which you're seeing right now. This is my Telegram channel. VPS switchover took place. Do make sure you've read this, okay? It is of paramount importance when a virtual private server does not have the, in my opinion, as I was very loud in the chorus about this, does not have the appropriate speed or power. It just makes it difficult when you're running stuff on the MT4 platform, right? In any algo. So having a good VPS that we're all rock solid with now, hopefully, because we made a corporate-wide upgrade. So just make sure, because we decided to increase the RAM, that you follow all the steps here and get it all set up straight. Any questions or anything on that, go to the back office, guys, open up a ticket. Our team's been exceptionally responsive. Hopefully that answers everybody's questions. If you guys do have anything in terms of something more personal you want to send out, this is my email address. You can keep this. Do not, as I caught some of the other day, do not sign my email up for any services out there. We will come after you and get you. But it is Auvoria Prime. .com. Did I get that right? There we go. So it's svetterl@auvoriaprime.com. If you send me an email, I do need your MyFX book. No whining, just set it up. Make sure it's double verified with both green check marks. I know it's a pain. Got to do it. It's all part of risk analysis. I've done it to all 4 of my accounts. It did take some time. So inauguration day is the next question I just got. I don't know the answer to that question. Inauguration day riots. I know they have fortified DC. I don't know what they're protecting the swamp from, just kidding. But they have fortified much of Washington, DC for the inauguration tomorrow. And I think that's because 80 million Americans are frankly completely pissed about the election results. So I have no idea what's going to happen. I don't know if they're going to put in martial law. I don't know if that's a conspiracy theory thing. I've tried to completely stay away from all of that. If there genuinely was going to be some sort of big problem that creeped up, don't you guys think we would have seen it in the market? You're an all-time high in U.S. equities, right? A lot of this has been driven because of stimulus, right? We call it cash is coming out of the helicopters. Central banks floating around with their black ops helicopters dropping cash down on marketplace, which usually lands in primary dealer accounts. Where is it going? It's going into purchasing stuff, equities, homes. We're at some high levels on a lot of stuff. It's looking quite bubblicious, guys. So I've talked about this a bunch. So we're going to be moving towards trying to figure out what, if any, bad policy is going to be brought down upon U.S. investors. Will that affect the dollar, obviously, in terms of more debt, right? And will it affect us in terms of taxation on investment? If those seem to come to fruition, it's going to be tough for the American capital markets. And I hope I'm wrong. So that is Inauguration Day. The VPS update happened last week, yes. Keep in mind, rioting is not because I've got a couple of questions on this. Rioting and any kind of unrest has really nothing to do with the capital markets, if you think about it, right? Because it doesn't, unless it goes on for a long period of time, right? If it doesn't affect corporate earnings, or it doesn't affect central banks' ability to do any type of lending or facility management, which is one of the primary rules of the Fed, keep markets, it's not going to affect anything. What will affect markets is policy change, negative to capitalism. That and or additional debt taken on by any country is a devaluing event for their currency. So those are the things you want to focus on. Don't try not to, because I know a lot of my clients get caught up in this, and I get calls and there's rioting, and but it doesn't, as long as it doesn't go on for a long period of time, it's not going to affect the earnings in the marketplace, right? And as long as that's not disrupted, I wouldn't even worry about it. All right, guys, that's it. I'm out. May your hearts not be troubled. Life will continue on. And if you choose, you can listen to me drone on every week. I run these calls at 10 a.m. Pacific and on Saturday and Tuesday. Get the word out. May you guys have a great week. May the trades be with you.